Hi, I'm Jim Kniffen, certified financial planner and chartered market technician. Today, I'd like to give you a quick, clear look at what the markets are doing, what's working and what's not, and what I'm looking at as we head into the final stretch of the year. Let's jump right in. The major indexes seem to be recovering after several weeks of pullback, a little bit of volatility. Looking at the S&P 500 with the moving averages, last week I mentioned that the S&P 500 had shot down below the 50-day moving average, the first time it's done that since April, but it has since recovered, and that's quite encouraging. Looking a little bit under the hood at daily volatility in the S&P 500, we see back on October 8th a very large red day here, which is very negative. And then last week we had a bearish reversal after NVIDIA announced strong earnings, but the market seems to have recovered since then. Staying above the 200-day moving average remains quite bullish, and if we get back and stay above these two shorter-term moving averages, that will continue to be very bullish. Failure here would be concerning. Looking at stocks versus bonds, when you think about your asset allocation, the money you have in bonds is giving you less return this year. The stocks are doing better, a little bit of volatility, but you're being rewarded for that risk that you're carrying. Looking at international indexes, nothing to sing about here. The emerging markets looks kind of interesting, but I tend to have a U.S. bias, and so I just keep the internationals on my radar. Corporate bonds are doing well, a little bit of a pullback over the last couple of months, but doing basically what we would expect them to do, while government bonds really are just not giving as much performance this year. Looking at large cap growth versus large cap value, the large cap growth stocks continue to outperform, although with a little bit more volatility. The large cap value stocks are giving nice year-to-date returns, but lagging behind the S&P 500 quite a bit, but a little bit easier to hold. So both parts of the market would have some merit. Looking at small caps, performing well, seeing a nice surge the last couple of days, especially microcaps continue to garner significant interest. Looking at the volatility stocks, the high volatility stocks are doing quite well, significantly outperforming the S&P 500 for the year, while low volatility stocks are really not giving you much performance at all. The dividend paying stocks, like the value part of the market, is giving nice year-to-date performance and easier to hold. Again, I see merit in these dividend paying stocks, but if you're a long-term growth investor, then things seem to be going quite well. And then looking at a couple of sectors, technology has led the year, but it's been hit very hard the last several weeks, and we want to keep an eye on this and make sure it bounces back. Consumer discretionary, not doing much, while healthcare hasn't done much year to date, but it's starting to see a significant surge in interest. And then we have five sectors that really are not showing any leadership at all: the financials, materials, energy, the real estate sector, and consumer staples. Hard to see anything exciting here at all. And that's your look at the market for November 25th, 2025. I hope you found this helpful, and if you did, please give us a like. If you have any questions, shoot us an email, and I hope everyone has a wonderful Thanksgiving.